Macro market trends, stock selection, ETFs, options. Just some of the topics covered in Cook's Kitchen.
Kevin Cook here, wishing you happy new highs in the stock market. Hopefully you're long plenty of your favorite names. Today I want to look at market internals because these tea leaves, these indicators, looking at the breadth of the whole market, have been bullish, continue to be bullish, and should keep us in the market here for a little while. So I've got 5 I want to look at. The first one we're going to start with is the percentage of S&P 500 stocks above their 50-day moving average. So let's take a look at that one right now. Now this is as of the close yesterday. So you see 71% of S&P 500 stocks above their 50-day moving average on this chart all the way to the right. And I'm showing you a year look at it so you can kind of see the ebb and flow, the volatility last summer, how it's been a little smoother now. You're definitely going to see this number rise as of today's close, probably above 75% as stocks rally here. So this is one that is still strongly bullish and is consistent with the trend here. All right, next up, I want to show you the advanced decline for the S&P 500. Often when you hear about advanced decline, it's for the New York Stock Exchange. We're going to look at it just for the S&P 500, and this is a percentage of S&P 500 stocks that are advancing versus declining. So, and I've drawn green lines at the 60% levels, both on the upside and the downside, because I think that's a pretty significant marker of a strong trend. And you'll notice for the past 3 months that this market has punched through that 60% level a lot more than it's punched through the downside. So a consistently strong market here where advancers continue to outpace declines on the S&P 500. All right, next let's look at the bullish percent index. Remember, the bullish percent index is looking at all 500 stocks in the S&P 500 and counting the number of them, in this case the percentage, that are on point and figure buy signals. Now point and figure is a technical charting system. Maybe you've seen the charts. It's with X's and O's. Now if you do that for each stock in the S&P 500, it's either a buy or a sell. It's on a buy signal or a sell signal. So here we have the S&P 500. Let's change that chart real quick. Bullish percent index. Another real strong indicator here for this market. 81% again as of yesterday's close. We'll get the update here. This is another trend marker, that keeps you bullish. And when you start to see this roll over, say below 75%, you might start to get worried. All right, now we want to look at new highs minus new lows, again on the S&P 500. And this is significant because, in any time frame, whether you look at it on a day-to-day basis or over the week. So let's take a look at that one right now. This one is, sort of in a decline for the first quarter here. We keep making new highs, but the trend is down, is what I meant to say. And again, this is as the close of yesterday, so you've got 385 on there. We expect that to launch sharply up as the S&P makes new highs above 1580 today. This is the weakest internal breadth indicator of all the 5 that we're looking at here today, as the trend is down, over the quarterly basis, but we expect it to pick right back up. All right, finally, let's look at the NIAD. This is the New York Stock Exchange advanced decline, and I've got a real-time update here as of just before noon Eastern time today. So let's go to the NIAD. 1,526 advancers, net advancers. So that's advancers minus decliners on the New York Stock Exchange. And you're talking about 1,800 stocks in the NYSE index. I drew lines at plus 1,000 and minus 1,000, again, to give you an idea of how strong this trend has been. So we expect to see that 1,500 number continue to climb as advancers outpace decliners. All right, and the reason we want to look at all of these is to gauge, how strong this trend still is. Now that we've made new highs in the S&P above 1580, what does it mean? It means a couple of things. Number one, buyers are still in control, and supply is less than demand. You've got, we had a 2% dip from 1570 down to 1540 after the bad jobs number. It was quickly bought up, and now we're making new highs. So this market is going to go to 1600 probably in the next 2 weeks, and then I see a target of 1620 probably into May. All right, I'm Kevin Cook. Thanks for watching Cook's Kitchen.